All right, good morning, wherever you are. Good morning, good afternoon, good evening. You're welcome to the Forex Beginners course, and we will be going through about five modules in this course. Everything detailed and well explained to help you begin your journey in Forex trading. Um, these are the course outlines. So, we're going to talk about what is Forex, how do you trade Forex, what is PEEP, what is leverage, what is lot size, different types of trading sessions, what is margin trading, how to place trade using MT4 and MT5. Those are the trading platforms. And of course, lastly, we're going to talk about setting up your trading view like a pro. Now, trading view is where personally I do all my trade analysis. All right, so without much ado, I like to go to module one. Now, module one, what is Forex? Now, foreign exchange market is a global decentralized over the counter market for trading of currency. So, in a nutshell, this is a online platform where you have the opportunity, you and I, irrespective of the country you find yourself, you have the opportunity to trade currency pairs either by buying them or by selling them. And you can sell other commodities at outside money. So that means you can also sell currency pairs. I mean, you can sell commodities like cocoa, like rubber, and some other financial instruments, as it were. All right, so that's what forex is about: the buying and selling of currency. Now, this time around, online. Initially, it was not possible when we did not have internet, but since the introduction of internet, it has made it possible for everyone everywhere from around the world to be able to participate, of course, in the forex. Now that takes us to what is traded. So, like I rightly said earlier, what is traded in forex market? Of course, you trade currency pairs. You trade different currency pairs. So, for example, the currency spent in America is the US dollar, while in Japan is the Japanese yen. In England or London, as it were, you spend the British pound. In Australia, you spend the Australian dollar, and of course, in Canada, you have to spend the Canadian dollar. In countries like Mexico, you spend the peso. In Nigeria, you spend the naira, and in European countries where you also get to spend the euros also. So what do you trade? You trade currency pairs, and like I said earlier, you can also trade different commodities. But in the context of our teaching in this module, we will just focus on currency pair because that is majorly what is traded in the forex market, and that is what we will be dealing with. All right. So before you can trade in the forex market, you need what we call a broker. Now, if I'm going to put it in a layman's language, a broker is simply a company or a group of people, a body that gives you access to be able to trade in the forex market. We have tons of them. We have FXTM, Octa FX, Ot Forex, you know, Pepperstone, and a whole lot of them who goes with different I'm going to call it different brokers everywhere. All you need to do, just find the one that one is regulated, and of course that suits you. Of course, some broker are location based. You find that some brokers, they function well in America, and they do not have access to function outside America, and different modalities surrounding. So you just do your research, find out which broker is acceptable within the country you are located, and that will be all. So you'll be required to sign up with a broker. Then hence for going forward, they will give you access to open a trading account. Then from there you can begin to trade on forex. All right, so like I said, this is just beginners class. Now, there's a general saying that in forex, that you buy at the floor, of course, and you sell at the top. What do I mean? It's just the natural law of life. Everybody likes to buy when the prices are low. Of course, that's what we mean by floor, and everyone likes to sell when the prices are high. Now, so characteristics of that, we have it in, like, from what you can see on my presentation here. So when when we are buying, we buy at the lower part and we sell at the top, which in this case is usually called the roof. As we journey into the intermediate class, you would see how we will be able to ascertain and approve and disprove some of these speculations and theories, so to say. And so it is said that we buy at the floor of, or at low, or we buy or we sell at the roof. So going forward, that takes us to the module two. Now, in the module two, we're going to start off with what is PIP. PIP, what is PIP? Now, percentage in point. Now, I like to, when I do this explanation, I like to do it in the easiest way possible. And how do I mean by that? Now, in mathematics, when you want to measure, you measure length in centimeter, you measure weight in kilogram, and you measure, of course, longer distances in kilometer. In the same way, in forex trading, the movement of price from one point to another is measured in pips. So that means if the price moves, maybe let's say 4 points forward, I could say, I would not be wrong to say it just moved 4 pips. So is the measurement value when you are trading. So literally that means I could say, oh, I made 40 pips today. I made 100 pips today. I lost 30 pips today. So whichever way, it's just to show you the value of measurement, and that would be that for that. For more information on this, you can just visit babypeeps.com, and you would see where they have a possibly a much more fuller information and for beginners class, and it will very much explain in detail all of this. All right, so that takes us to the next conversation, which is the bid and the ask price. Now, if you're someone who goes to the market a lot, you find out that whenever you want to purchase a commodity, let's say for example you want to buy let's say a pair of shoe, sometimes the seller will tell you, okay, this pair of shoe is going for $20, and you can bargain. So it's that, then now the bid is what the asking that's the asking price. So the seller is telling you, I'm going to sell this for $20. Then you're going to bid for, oh, I don't have $20. How about I pay you 15 $15. So that is the bid, and that is the what, that is the ask price. The difference between the bid and the ask price is what we call spread in forex trading. All right, so like I just said earlier, so the spread is the difference between the bid price, the bid and the what, and the ask what excuse me please, and the ask price. And it is very important that we know the difference in our trading. So don't worry, as we proceed, I will explain everything in detail where the bid ask price, or the spread, so to say, comes becomes a thing of importance. So we'll go over to the next one. Now, I also want to talk about leverage. Leverage, very interesting. I like to say it this way: naturally, based on the requirements needed for you to start trading, naturally the average person should not be able to trade in the forex market, because you should be needing about over $1,200,000 for you, or worth of equity, for you to be able to trade in the forex market. However, volume sorry about that. However, leverage has made it possible. So leverage is simply, oh, let's say for example I have $10. So if I use a 50 to 1 leverage account, it simply means that for every $50 I have, if I'm going to do a multiplication, that is going to be 100 times 50. That means I have 5,000. So that means I have 5,000. So that boost, so leverage is like more or less, so to say, like a money booster. It boosts the amount of or the volume of assets you can buy naturally. And it could also, one of the things I like to tell my students is that as good as leverage is, it also affects your profit, and it will also affect your loss. So if your leverage is very very high, that means that if you're in a winning trade, you're going to win well, and if you're in a losing trade, you will be quite exposed than someone who is using a lesser leverage. So that takes us to the next conversation. What is lot size? Now, lot size is like I said, lot simply means the units measuring transaction amount. So, for every currency pair, every instrument you want to buy on the forex market, what the quantity you want to buy is what the lot size is. So let's say, for example, and there are different types of lot sizes. You have the smallest we have is called your micro lot. Now your micro lot is the smallest, is 0.01, 0.01 in the forex market, and from there you have the excuse me, you have the what is it called, the mini lots, then you have the stand. So some people also have the nano lots, but much more familiar with is the micro lot, which is 0.01. Now what is the interpretation? So let's say, for example, for every pip movement, if you're using a 0.01 lot size, what is simply telling you is that for every pip movement, you will make 10 cents. You will lose or make 10 cents. So either you're winning or you're losing. You're going to lose or win or make 10 cents. But if you're using a mini lot is 0.1 lot size, which is here. This one, for every pip movement, you lose or you make $1. If you're using a standard lot, that means for every pip movement, you lose or you win $10. Are we together? And the bigger the lot, the more money you make. And let me also say that the bigger the lot, the more money you stand to lose. All right. So it is important that we are able to effectively manage the lot size we are to use per trade, so we do not blow all the money we have in our account. In the intermediate class, you will be taught how you are to determine or decide your lot size. Now that takes us to the next conversation, which is session. Now, because you will agree with me that the whole world is in a different so while I'm speaking to you here is 10 p.m. in this 10 a.m. in the morning here. Some people are still in the midnight, while some people are already, the day is already clocking at their end. So in the same vein, in forex we have different trading sessions. I like to put them in three, but this diagram I have here puts more explanation in it. So I have the London. So I like to call them the London session, the New York session, and the Asian and the Asian section. So you can see it on the right. We have Forex Market Center. We have so the Frankfurt and the London are under they are under the London session, while what is it called? The New York session has of course the New York section stands alone. Then you have the Asian section, which is the Australia and the Sydney section. So you might want to ask me, what are the so in the London session, or let me so to say, if I'm not wrong, you can see in the European section, what currency pair do we choose? Do we trade? We simply want to trade currency pairs that have the euro, the Great Britain pounds attached to them, and the Swiss francs. In this case, we call it the CHF. So you want to trade GBP, you want to trade CHF, and you want to trade the euro. So when during the London session, that is what you want to trade. So and the London session over here in my time here in Nigeria, it starts by of course 6 a.m. in the morning. Of course, they've been shifting the GMT, so you can make it at 7 o'clock in the so 7 o'clock in the morning Nigerian time. Here, the London session is opened. All right, so that takes us to the New York section. Now, the New York section, as okay, opens, let's say by apparently about 2 o'clock. Now, the reason why you're seeing 12 here is because of the Canada section. So under the New York section, two currency pairs are most important, which is the Canadian dollar and the American dollar. So usually the peak of that it opens by 12, But the peak of the trading in the in the New York session start is by 2. Then finally, we have, of course, the Asian section. Under the Asian section, we have both Australian dollars, we have the Japanese yen, we have the New Zealand dollar, and okay, that means the AUD, the JPY, and NZD. Those are the currency pairs you want to trade. So in the New York section opened, the New York section, like I rightly said, that's the American section, of course, opened by 12 Nigerian time and closes by 8 in the evening Nigerian time. Now, excuse me, please. Now, why the Asian section opens, because of the change in GMT, it opens 11 p.m. Nigerian time and closes by 8 in the morning, 8 in the morning Nigerian time. So that is for trading section. And of course, we already talked about what is spread, and that is where we take a pause for module 1 and 2, and we will continue later on.